All right, good morning, everybody. So today we've got a lot of speakers. There's this event with Bailey, Lagarde, Powell, and Yuta. And we have ECB president later on. Christine Lagarde is going to be out speaking. And then we've got Villeroy. So it's a full house. 0-day traders this afternoon. You really want to be careful. We've got this bank stress test result. This is a high impact anticipated outcome. So you really want to be cautious and careful if you're holding your 0-day trades late into the afternoon. You can see here US bank stress info, dark. So it's anticipated to be eventful. With the thing about the chip stocks for today, keep in mind the reaction that we've seen so far is because there was a proposal to do a cut, right? To be more restrictive in the exports on microchips and who can buy them and who can't buy them. So NVIDIA and others had been getting past the current loopholes by making a reduced chip, right? Not as powerful. And now the proposal is to add that weaker chip onto the list of blacklisted chips. Guys, give me just a second. I'll be right back. All right, sorry about that. So yeah, just kind of keep that in mind. Nothing's been enacted yet. No laws have been passed. Nothing has gone through its process or its due process. It's just a proposed idea at this point, which means we're very likely to see some sort of a rebound in those chips. Another thing to keep in mind is the anticipated impact to just NVIDIA would be about 20% of its sales. But NVIDIA's projections were already off the chart amazing. So if you knock back 20% of amazing, it's still probably pretty awesome. Day-to-day traders really don't get into it too much, but there is a valuation, a projected value to a company's stock, right? So when companies get an upgrade or a downgrade and some analyst gives a reason why that stock should be valued at a higher price, or why a company's stock is considered to be overpriced, some of it's subjective, a little bit of hypothesis, this playing with the numbers scenario. And then a lot of it is just based on pre-existing information that we had through old sales and old data and things like that. So look at the projections on what NVIDIA stock is actually valued to be. versus what its current price is. And you'll maybe kind of get a better idea of how much more volatility we're expected to see in there. We do have additional auctions today as well. So really it's a full day, all day. And after yesterday's trend day, it wouldn't surprise at all for us to deal with that chop for the rest of today. Having said that, however, this is a classic pattern, although on a micro scale. And the follow through is another leg up equal to this last leg. All right, so there's like a scoop pattern here. This is different than the more classic old school Wyckoff kind of charts, right? Where it's on a weekly or a monthly and it's like a 10-year pattern. That's not what I'm talking about, because that is a pattern that's sitting at the bottom of the charts, and this is sitting at the top, right? So this is a continuation pattern, not a reversal pattern. All we got to do is break through yesterday's high and then run the measured move up 50% and then 100% of yesterday's move. Now, one thing to keep in mind, after a move like yesterday, a lot of people anticipate that we won't get a second one. And it makes sense, right? Because more often than not, you don't get two of these in a row. But yesterday, a lot of that move was options related, right? It was zero-day shenanigans was a part of some of that move. And it can repeat itself again today, especially if shorts get squeezed. The more they get squeezed, the more we'll go up. The more we go up, the more shorts get squeezed, like a vicious little cycle. So it's possible to have another one of those again today. It's not likely, it's not probable, but it is possible. And keep your eye on that if we break out above yesterday's high. Otherwise, being trapped inside of yesterday promises that we're very likely going to have a choppy, sideways, nasty day. I continue to see posts from people that say, oh man, I got chewed up this morning and I walked away and I missed that afternoon run. And when I make the comment that I make, why were you trying to trade in that? It's choppy, it's nasty. Well, I didn't know that at the time. Really? You didn't know that it was going to be choppy and nasty? I'll give you a little hint. And this isn't 100%, but it sure works most of the time. If your price action is sitting inside of the Globex price action, right? If we're sitting in this box as we come into the open, it's probably going to be choppy, nasty, difficult, hard to trade. That's a very simplistic but effective way to avoid getting your butt handed to you by getting chewed up at the open and then being able to complain later, oh man, I got ripped apart. Why? Were you trying to trade in that? The other one would be if we're inside of yesterday's price action. Now, that statement doesn't really fit for today because yesterday was such a really big day. But when the day before is a choppy, sideways, nasty day, and then this day starts out as a choppy, nasty day, until you get out of that range, it's going to continue to be choppy, nasty, difficult to trade. So, good rule of thumb, if you're still inside the Globex and your strategy is not designed to deal with this kind of trash, don't trade it. Don't do the hard stuff. When you look left and see that we're still sitting inside of yesterday's price action, and that happens to be a choppy, nasty, narrow day too, maybe don't trade that. It's a good rule of thumb. It's not perfect. you can see how we had some really nice price action after we did finally break outside of that Globex yesterday. And around 10 o'clock yesterday is when I had made the comment, this has the capacity or the potential for a trend day today because of all the different things that go into being able to make that statement. And that's exactly what unfolded. So the hints were there by 10 a.m. We never know for sure. And then even if we can identify that it's a trend day, we still don't know exactly how far it's going to go. That's where gamma levels come in. So if you are looking at today, we've got a pretty narrow range and a high and low that's been set that offers the same kind of structure to your trading with a little bit of rules and some self-control. All right, just don't trade inside of that. Wait for it to get out of the box. And you're likely to find much better price action. We have an MDP today that's a missed daily pivot. It is exactly what it sounds like. We have not yet hit the daily pivot. So we've missed it. We haven't hit it. As long as we continue to have not hit it, then there's a little structure behind that. It's not my strategy. I don't even trade the strategy, but it does provide insight, right? And that's one of the reasons I continue to mention it, even though I don't trade it. If you learn what a missed daily pivot is, then you'll understand the depth behind recognizing if today is or isn't a missed daily pivot. It really holds more weight for tomorrow than it does for today, right? If we can get through the whole day today without having hit that daily pivot, it matters more for tomorrow. Didn't mention it, but volume is normalized. We're not heavy, we're not light, we're sitting Goldilocks, just about okay. So we don't need that and just turn it off. We are getting back above that weekly pivot, and that holds its own weight, right? The idea is when we're above that weekly pivot, we want to try to find bullish opportunities. We want to try to find long trades. We have an expectation that the market overall, broadly in general, is going to try moving to the upside. And when we're below it, we expect all of that on a bearish nature. So we got to get above it. Crisscrossing back and forth through it isn't helpful. It isn't useful to anybody. We want to get sustained moves beyond it, right? So like last week, when we broke down below it, there's the weekly pivot point. We kind of hovered around it, up and down, up and down, up and down. But once we finally did get through it, there was no wishy-washy, maybe kind of, sort of, are we going to be staying below it? We were 100% done with it. This is a very large TRB setup, right? So it's nice to see that we're starting to get that follow through. The target is 4,500 eventually, not in a straight shot, not in a straight day. Very likely though, unless some of that bank news maybe knocks us down a little bit, the follow through is that we get right back up to the highs. Yesterday was a really good start. We're tangling with that 10-day moving average. So we got to get through that. And once we do, if we can get above 44.27, we should have a nice straight shot all the way back into at least that 44.70 area. So depending on where you like to put your proximal line, that'll be the first area of concern. 44.69. You could put your proximal line at 44.58. Yeah. Either one of those would be an acceptable level. All right, 10-day, 30-minute volume profile with TPO. As we talked about yesterday, the profile moved up to the bottom of the chart. We lost all of that lower volume from back here. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. Since the volume profile moved up to our bottom, it looks like, if we were just looking at it here, it looks like price came down, hit that volume profile level, and moved off of it. But we know that that's not what happened, right? You can go back and look at the briefing from yesterday. Price had already made that low and made this low, and had, at least in the morning briefing, we had this low. And we were talking about how the profile was going to come up. So we know it didn't hit and bounce and move up. I have to continue to remind people of this, because the way that you're looking at it right now, that's not the way that it looked, say 2 weeks ago when price was running up here. So when you see that high and it looks like it hit the line and pulled back, and it broke through the level here and then it pulled back, those levels weren't even there yet when price was making those moves. Okay. So however you want to wrap your mind around it, just imagine that we're taking this template with the volume profile and we're setting it right on top of these candles now, today. And it wasn't there when all of these candles were formed back there. So its only value is looking at where we are right this moment, and then looking at the volume structure to define air pockets of risk, areas of resistance, things like that. In a topside breakout for that discussion of getting back to 4,500, it's really shallow up here. So other than that 4460, 4450 area that I had just talked about a few minutes ago, other than that area, we should be able to move through it pretty quick. The main thing is the cog line at 4432. We got to get past that. And once we do, it's a nice shallow move through there. We have a VPOC to deal with from yesterday. $44.20 area. So any moves to the upside, we've got to get through that, right? That's the greatest amount of volume from yesterday's price. Greater than the 12 hours that we spent in the Globex and in the first part of the trading day down here. There's more volume at the top in that little window of time, that 2 hours that we were there, than the 12 hours that we were down here. So talk about hitting a ceiling, right? It's going to be difficult to get through that level for sure. Really not much to say about the 10-week. We're not at extreme levels. We're not even really at concerning levels, but we're 2.7% above the 10-week. It's holding steady, and it's not really anything that we need to get too concerned over. Flip this back to a daily. We're just coming back up off of that 10. All right, so a 10 MA bounce and now a move back up through it. Like a ride the 9 kind of strategy, right? The range for the week was just over 100 points. 44.40 is the line in the sand to the upside. And remember, we can overshoot that level as long as we come back in again. right? We're supposed to close inside the box 80% of the time on the S&P and 70% of the time on everything else. And right now, I mean, we're not even out of the box yet. So not too much of a worry there. I'm really concerned with the outcome of the bank stress test today. So you can see the moves that we had yesterday in the banks and in NY Fang combined. When these two started working together, when they broke through that 5-minute open range and really started working together, that's when the market really took off, right? Individually, neither one of these would offer much conviction on what's going on with the market. But when we're able to look at them combined, right? First, we had our 5-minute open range breakout on KRE, and the expansion began really good with the advanced decline on the S&P 500 expanding strongly with it. So we knew it wasn't just banks. And not too long after that, once this had really started to top out and pull back through the lunch zone, we had NY Fang break out of its 5-minute and join in on the fun, right? Plus we had the CTIX. Now, it's a homemade indicator, so there's not a lot of background on it, but the way that it looks, right, its presentation is something I've kind of picked on after a while. It became my go-to. So when they're wrapped around each other like Twizzlers and they're pointing in one direction, that's okay. I won't argue, I won't go against it. But when they're spread out like a fork and they're all pointed in the same direction with the green line leading, that's my highest conviction stamp or check or validation piece out of anything else that I could look at. But it's still just one piece, right? We get to add all the pieces together. So I've got pictures of the different signals, I guess is a good word for it. And that got added to my signals pictures yesterday. Classic fork shape after the green line broke away from the group and really advanced a lot harder and faster than the other two just to get that final spread and then riding in that fork pattern. Another signal worth keeping your eye on is a green line crossover. That happened to be right around 3 o'clock yesterday, but the warnings were coming, right? We started to narrow down. It topped out. Notice that's where the S&P, it's where the NY Fang, it's where all of the markets started to pause, top out, consolidate. So we had warnings, right? We had warnings that it was all coming to an end. So that was another piece of the puzzle yesterday that was kind of giving us the heads up that it was going to be one of those days. Those special trend days are very unique, right? Finding trend is easy. You can always find trend. All you got to do is go to a small enough time frame and you can find trend. But having one of those days, being able to recognize it early enough to monetize it and to not try to short it is a big part of the whole process. Weighted AD yesterday, really nice expansion. I would have liked for it to have gotten above 500 a lot sooner than it did. That's usually my benchmark for this. But even just the nice clean advance in there where it continued to set those higher highs. And then the ticks themselves, dominantly green with minor crossovers into the red. When you put all of those pieces together, and that doesn't even get into things like SVXY, the VIX, what was going on in the bonds, what was going on, right, with the dollar. I didn't even touch on any of that as another validation on what was happening yesterday. So these moves, they're not happening in isolation. It's not some gotcha surprise that you couldn't see coming, because all the signals are there early and often that we had that on the table. Who cares, right? That was yesterday. Bitcoin's down 1% this morning. Obviously, semiconductors and KWeb emerging markets. The FANG group that I made, the little FANG index, is also down nearly 0.5% this morning. Things that are up, nat gas. What a sorry turd that is. And that's really about it on the upside. Let's see if we could get a little better. Maybe if we bring in Trend Spider here. Yeah, it's not looking really good across the board in anything. It's not negative and it's not positive. It's in this hold up and wait, hurry up and wait. All right, so the semiconductor ETF 149.25 in the pre-market. We closed at 151.50 yesterday. So we're down more than 50%. For this TRB setup on the SMH. This news this morning very likely just shut the whole thing down. That's a heck of a gap down, but I wouldn't count it out, right? So many people are just still stuck on that hype, and the excitement for AI and the projections for how much semiconductors are going to do, and the fact that this is just a proposal, it's nothing that's been actually set into motion. I'd be watching for a rebound, a breakout, and a push above that 10 with that 156 still in focus. And that goes for all of them, right? NVIDIA being the worst hit, there's still a lot of people that was salty that they didn't get into this thing earlier. So, a retest of the 20 from yesterday at that 406. I mean, that's where we're at this morning. We're down here again for another test of that 20. You got to kind of imagine that if we close this gap down here and we get on the other side of that, well, we might just challenge this 360, 370 area. So far, it's recovered from the inside day breakout. It broke out of that 626 level. And it's already came back up. So I'd be watching this one. It's got a long ways to go. Maybe using the 50% of Monday, right? 414.32. If we can get above that, which happens to be a daily pivot point, then we can consider the possibility of a TRB. But at this point, it hasn't even had the crossover for a TRB yet. And until that crossover even happens, it doesn't have any other weight. All right, AMD, same thing. It got hit pretty hard, but it's working its way back up again. This also doesn't have the TRB yet. It hasn't. A TRB is trend line breakover, right? So it needs to actually have broken over the trend line for it to be a TRB. We don't have that yet. Want to focus on Monday's high, that 112.44. It's a lot of work to do. Short-term trades, right? You could just buy it along the bottom if you get another chance to buy it along the bottom, because it's your low risk entry opportunity, right? LRE. You won't have the signal of conviction, but you'll have the lowest risk entry. Otherwise, waiting for the breakout makes more sense. %25 of the NASDAQ is down 0.5% this morning. %12 of the S&P is down 0.5% this morning. So those financials are still holding up reasonably well. I would look at those and see which ones you would like to short. Maybe take a look at a few of those for an either or thing, right? We know the banks are getting ready to make a move, up or down. I see. I'm seeing a lot of those China ADRs in here too. JD, PDD, which kind of makes sense because we've seen emerging markets are down. KWEB is down. We had that little bit of weakness yesterday in US dollar Japan, and that's gone. This thing continues to march to the upside with another inside day breakout today. This is going to be a really big deal. US dollar China breaking through this rally based drop area. Lots of liquidity. And at this point, it's through there, right? What liquidity? It's done. It's gone. If we can close above that, that's going to be a really big deal. The ramifications of this is very likely going to be felt across the board in just about everywhere. The week's not over, however, so let's see if we can get a pullback and a rejection and kind of keep it in under the zone. We are overextended quite a bit from the 10-week. That might help us out with that pullback. And for the 10-day too, we are really overextended here, and that might help a little bit with the pullback. But considering that we just had a pause yesterday, that might have been the only pullback it needs, and it's just going to be a ripper. Mm. All right. So same thing I talked about the other day. The dollar's stuck in this range. It needs out of this range. And until it does get out of this range, there's really nothing else to do with it, right? We're holding that 10 like it's a security blanket, and it's got to get away from that thing. So break above 105 would be a good start, or a breakdown below 101, and anything in the middle of that, as long as it's not making exaggerated moves, moving too fast on the intraday basis, that's a wrap on that thing. Bonds are really, really tight. It's not a squeeze per se, but we've got these OCR style, higher lows, equal highs. Now we've got a lower high and projected to have a lower close, but still a higher low. So a lot of compression here, right? It's winding up tighter and tighter and tighter. And the thing about compression is expansion, right? So the tighter this winds up, the bigger projection on the move. So you really want to kind of think through, what's it going to impact to see the bonds move, say 8 points to the upside, right? And how much is that going to affect, the TNX to the downside? 3.76. As long as we're staying underneath that 3.9 and we're staying above that 3.3, then this is another one of those, it's got to do something, right? It's got to get out of the box. So watch the clock today, watch the news, be very careful with these banks. Not to mention all of the talkers today. It only takes one Fed official to make a misstatement, or for a reporter to misinterpret their answer and put out some data that maybe gets retracted 20 or 30 minutes later, but by then the market's already made some gigantic whipsaw from one direction to another, right? So you got to be cautious when those speakers are speaking, especially if they're going to take questions. One of the easiest things to do is just check to see if it's live, or if it's going to be, just a recorded press release, if they're taking questions or not, and the venue, right? If they're at Girl Scouts of America for lunch, probably not going to get hit too heavy with questions, probably not going to make some stupid policy sentence or statement that screws everybody up. Makes sense. Everybody be careful, be safe. I'll see y'all tomorrow.